Hello, guess what? It's time for another learning lesson right here on Street VHR. I'm your one and only host, Brendan Yemichaba, and today we're looking at the term accounts receivable. Have you ever heard of it before? Well, I'm about to find out if Kenyans even know the meaning of this term, and I'm super excited to have your interesting answers.
So means if somebody tukipeana good nje ile nyana tulipa,
The money that
comes into the company.
Account receivable,
Yes.
is maybe that the amount of money that comes from, like the loan that comes into our accounts. Yes, like from World Bank or other bodies that maybe we shall pay later.
Accounts receivable is amounts that are due to you, that you're supposed to be paid from your debtors.
Account receivable means you do accounts, you do every undertaking of stock taking of that given time.
Yes.
Then it means you have to pay that you have done initially.
Watu wanakula hesabu ya kureceive mahali.
Yeah, makes sense.
Yeah, I have heard of it. And I think, because I honestly can't remember much, okay, I think that this is the amount of money that one can receive in their bank account or from one receiver from the sender to the receiver.
Yes, accounts receivable is what you receive. Like if you are doing business, in your balance sheet, the business you have done and you have not been paid, whatever is outstanding is accounts receivable.
Now guys, after getting the chance to see what exactly you understand with the term accounts receivable, I know we need to break it down for you so you clearly understand how this can affect you as an individual or a business owner. Now joining us is the one and only George Imunga, who's the managing partner of AMG Kenya as well as a tax expert. He's going to break it down for us, and we'll just jump right into a first question of the day. And we're just trying to understand what accounts receivable is. It sounds like an easy term yet a complicated term at the same time.
Accounts receivable, just as the name is pronounced, is money that you expect to receive from your debtors. So the other term is debtors. Let us just use the example of the retail chain that we're talking about. The persons they sell to. If they sell to them on credit, then those becomes their debtors, and that is what we call accounts receivable.
Okay, and how can one acquire accounts receivable?
You can only acquire accounts receivable by offering a service to another party or by selling a product to another party on credit. It must be on credit for it to become an accounts receivable.
Okay. Is it a payment or a cost? The accounts receivable, is it?
It is a payment. It's not a cost, it is a payment.
Okay, perfect.
It is a payment, and it goes to your income statement as a revenue.
Okay. Please just lastly explain to us the end-to-end process on accounts receivable.
The first of all, for you to have an accounts receivable, you must have made a sale. For example, you've sold a product to another company. Once you make a sale, you do the invoicing. Once you do the invoicing, you post that in that client's ledger, meaning that client, if it was XYZ company, then you have a ledger for that client called XYZ debtors ledger. So you post that amount to that ledger. Once you do that posting, then it goes into your balance sheet as an accounts receivable. So it starts from the sales point to the invoicing, and then now to the posting into the debtors ledger.
Wonderful. Thank you again, George, for that amazing explanation. That wraps up our learning lesson today on today's Business Time right here on Street VHR. But we always have more times to explain for you on our other episodes. So join me on the next one.